All right, welcome to The Explainer. Today we're going to decode a massive shift happening in finance, one that could completely change how money moves around the globe. We're talking about tokenized deposits.
Okay, so here's how we're going to break this all down. First, we'll look at the old-school problems this tech is trying to solve. Then we'll define what a tokenized deposit actually is. We'll see who's already betting big on it, weigh the pros and cons, and then wrap up by looking at what this could mean for the future of, well, value itself.
First up, let's talk about something that's probably driven you crazy at some point. I mean, we live in an age of instant everything, right? So why on earth does sending money, especially internationally, still feel so slow and clunky? It's like it's stuck in the dark ages.
Well, the reason is the whole traditional system is built on these ancient layers of middlemen and, weird cutoff times. It all just creates friction and delays that feel totally out of place today. But what if we could just wipe all that away? And this is where this powerful new idea comes into play, the tokenized deposit. The best way to think about it is like a bridge. It's connecting the old world of traditional, regulated banking with the incredible speed and efficiency of the blockchain. So what is this thing really? Now, this is crucial. It is not a new currency like Bitcoin. A tokenized deposit is the exact same money you have sitting in your bank account right now. All we're doing is putting it inside a digital wrapper, a token, that lets it fly across a super efficient and secure network.
Okay, so this is where we need to make a really important distinction, especially from something you've probably heard of, stablecoins. See, stablecoins are issued by private companies. A tokenized deposit, on the other hand, is a direct liability of a regulated bank, and that's a huge deal. It means you get all the security and regulatory muscle of the traditional banking system right from the get-go.
And look, this isn't just some theory cooked up in a lab. We're talking about the biggest names in banking, the real heavy hitters, actively building this stuff out right now. It's a massive signal that the whole industry is shifting.
Let's take HSBC, for example. They've already launched a service that uses tokenized deposits to settle payments instantly. We're talking payments between places like Hong Kong and Singapore in dollars, euros, and pounds, just happening. No more of those frustrating, sorry you missed the cutoff messages.
And over in the UK, there's this huge pilot project going on to create a shared network for a tokenized British pound. They're testing everything from simple online payments to really complex stuff like buying a house, and major banks like Lloyd's are all in on it. And it's not just about cash, The French banking giant Société Générale is showing that you can do this with other financial assets too. They're taking things like bonds and putting them on the blockchain so they can be traded and settled directly. I mean, that's a crystal clear signal that the big institutions are taking this incredibly seriously.
So, okay, the potential here is obviously huge, but it's not all smooth sailing. There are definitely some real-world challenges to overcome. It's that classic battle, promise versus practicality. So let's dig into the trade-offs. All right, on the plus side, the benefits are pretty amazing. We're talking near-instant speed, rock-solid security from the blockchain's immutable record, and of course, lower costs because you're cutting out some of the middlemen. But the real game changer? It's programmability. Just think about it, an invoice that literally pays itself the second a delivery is confirmed. That's the kind of smart, automated finance we're heading towards.
But here's the big hurdle. The single biggest roadblock right now is regulation. You've got governments and financial authorities basically playing catch-up. A perfect example is in the EU. Their big crypto law, called MiCA, doesn't really have a clear box to put these bank-issued tokens in. And that creates this gray area, this uncertainty that has to get sorted out.
So a key date to circle on your calendar is 2026. That's the year the UK is expected to have its full regulatory framework for crypto in place. And that's going to be a huge step, providing the kind of clarity the whole industry needs to really move forward with confidence.
Okay, so let's pull back and look at the big picture for a second. What does all this really mean? I'm talking about the future of how we even think about value, how we store it, and how we move it around.
For the big traditional banks, this isn't just some fancy tech upgrade. This is about survival, plain and simple. They're up against these nimble fintech startups and crypto innovators. Adopting tokenization isn't just a nice-to-have. It's a must-do if they want to stay in the game.
And if we zoom out even further, this could change how entire economies are run. Imagine central banks having the ability to implement monetary policy with surgical precision, thanks to programmable money and real-time data.
It's a massive building block for a future fully digital financial system, especially when you start talking about things like central bank digital currencies. So, when you really boil it all down, what are we looking at? This is so much more than a new feature on your banking app. This is a fundamental evolution. It's like we're upgrading the very rails that the entire global economy runs on, making them faster, smarter, and way more secure.
And that leaves us with one final, pretty mind-bending thought. As this technology really comes into its own, are we watching the exact moment where money stops being just a static number on a screen and becomes an active, intelligent, programmable tool? Definitely something to think about.